Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning and happy Friday. Today will be the 22nd of August 2025. So, as usual, before we kickstart our Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into those short-term intraday technical outlook, let's have a recap what has taken shape yesterday and as well as in early today's Asia session before the start of our daily dose at 11 a.m. in terms of the key US economic, in terms of the key US and other major developed nation economic data, news flow, and as well as their impact on the intraday movement of the various broad-based cross-asset classes over here. So for yesterday, let's kickstart yesterday first. So over here, yesterday, we do have a slew of economic data to actually digest, which I want to share with you guys ahead of today's key risk event, which is the Jackson Hole Symposium. Later, I'll touch more about that. So yesterday, we have the release of kind of a Tier 1 US economic data, which is kind of a leading economic data as well, based on survey-based sentiment data, which is the global manufacturing PMI data for US, compiled by S&P Global. So they call it S&P Global Manufacturing PMI data, and as well as the S&P Global Services PMI data, both from US. And these are preliminary figures, flash figure for the month of August. So what's surprising over here is that we know that previously manufacturing activities in the US has been declining over here. So what's interesting is that data that came in yesterday took market participants by surprise. It rose to a 3-year high. And what's interesting over here is it came in into an expansionary territory. So we know that PMI data, anything that is below 50 is considered as contraction. So it has been in the months of contraction for since the start of this year. Over here, market is expecting a slight dip to 49.5, but it surprised market to 53.3. So if you look at the trend over here, let me share with you the trend. Yeah, this is the United States PMI data as compiled by S&P Global. So it rose to 53.3 in August, and that is the highest reading since 2022. So that's almost a 3-year high. And if you look at the trend over here, it's very clearly there's a sharp uptick after in a contractionary period since the start of this year. I mean, it's kind of a whipsaw over here. And what's interesting as well is that from the services side, services also remains resilient, holding above the 50 level mark, and also came in above expectation. Market is expecting a slight dip to 54.2 from the previous July print of 55.7, and it came in at 55.4, almost the same pace, but above market expectation. So if you look at the services PMI data, in terms of trend, is still rather resilient. So now, with services activities remains resilient and manufacturing activities in the US expand to a positive territory and it rose to a 3-year high, that actually potentially could jeopardize that interest rate cut expectation that market has assigned a high probability since that disastrous non-farm payroll released 3 to 4 weeks ago. And with that, yesterday we also have 3 US Federal Reserve officials sounding rather hawkish rather than dovish based on their public speeches. So what do I mean by that? So if you look at over here, let me expand my screen so that you guys could have a look. Okay. So where is it? Yeah. So yesterday, this Atlanta Fed President Bostic, he sees just only one interest rate cut this year as appropriate. So that is actually below the previous or the latest Fed dot plot that was released in the June FOMC meeting, where the median Federal Reserve officials projected two interest rate cuts. So Fed Bostic is not so dovish; he only sees one due to inflation risk. Another uh, Fed officials, Schumich, he said that inflation still outweighs the risk to the labor market. That means he still view that yes, we do have a soft non-farm payroll data, but however, the elevated inflation risk kind of pays more weightage in his own opinion over the soft labor market. So that's also a hawkish speech. And another Federal Reserve officials, there's this lady over here, I think it's at the top. Where was it? He also did mention. Okay, I think it's somewhere around here. Give me a second. I want to highlight to you. Okay, there's this lady called Cleveland Hammock. Cleveland Hammock. Where is she? Yeah, correct. So Cleveland Hammock said that she wouldn't support easing if the officials had to decide tomorrow. So it's very clearly clear cut that these three US Federal Reserve officials, based on their public speeches, are not so inclined to actually vote for a interest rate cut in the next month FOMC meeting, which is the September month. All right. So that actually kind of reduced that liquidity scenario in the US economy and created a negative feedback loop into the US stock market. And what also reinforced the US stock market weakness yesterday was Walmart over here. So Walmart is one of the component stock in the Dow Jones Industrial Average. So later I'll highlight Walmart impact on the Dow Jones Industrial Average. Give me a couple of seconds. So Walmart yesterday shares fall. So it actually declined by -4% plus after profit miss expectation for the first time in 3 years. That means, i.e., that is a surprise miss. So it's only the first time that Walmart miss its earnings expectation. All right, so it's actually due to rise in insurance claims and legal charges, and as well as restructuring costs. So despite the fact that it Walmart during the press conference, the management actually rise their full year sales guidance that is not able to actually negate the current sentiment that is being seen on Walmart yesterday. So Walmart being a key component of the Dow Jones Industrial Average, that actually causes the Dow Jones to fall as well. So in the last three sessions, that means from Monday to Wednesday, Dow Jones has been rather flat, being supported by other areas of the US sector. That means from consumer staples to industrial, and managed to hold the fort as the mega big cap technology stocks see sell off since the start of this week. But however, Dow Jones Industrial Average was not spared yesterday due to the weakness of Walmart. So all three of them fall in unison yesterday, caused by also the rather not so dovish remarks from the three US Federal Reserve officials, and that a rather resilient and firm reading of the S&P Global US manufacturing PMI data and services PMI data for the preliminary reading for August. So the SPX fall by -0.4%, the Nasdaq fall by -0.46%, the Dow Jones down by -0.3%, and surprisingly, the small cap buy right, it should also fall. Buy right, it should actually face a negative feedback loop given the lack of potential reduction in liquidity caused by that not so dovish US Federal Reserve remarks, but the Russell 2000 continues to remain resilient, up by 0.2% over here. So let me take a step back over here. Is that yes, we start to see very firm US preliminary manufacturing PMI data and services PMI data compiled by S&P Global, that three not so dovish remarks from that three Federal Reserve official that I share with you guys. But what is the CME Fed Watch 2 is telling us based on the trading behavior of the Fed Funds futures traders in the Fed Funds futures market. Yes, the reduction has been reduced over here. Previously, market is assigning about 80+% since the start of this week. This has been reduced to a 75% chance that the Fed will still cut or potentially cut interest rate by 25 basis points to bring the Fed funds rate to 4% to 4.25%. Currently, the Fed funds rate is at 4.25% to 4.5%. So that is still a chance that the Fed may reduce rates in September, okay, because it didn't drastically reduce to around 60% or 50%. So there's still a rather high chance. Yes, indeed, yesterday before the release of that that services and PMI data from S&P Global on the US economy, it was higher at 82, and a week ago it was 92. All right, still a high chance. But let's see down the road, okay, what are the expectations in the next 2 months? All right, so down the road, very interestingly, right, market is still looking at a high chance of another 25 basis point cut. That means total there will be 2 cuts each of 25 basis point to bring the Fed funds rate to 3.75% to 4% by the end of 2025, because this is the last meeting of 2025, the last FOMC meeting of 2025, which is on 10th of December. The Fed funds futures still assign a high probability of 98% chance, right, for the Fed funds rate to be at 3.75%. So if you minus 3.75% to the current rate of 4.25%, that actually implied a 2 potential interest rate cut of 25 basis points each that is still alive, being based on the latest pricing on the Fed funds futures market. So that actually explained to us it's not really a liquidity squeeze yet that may take shape, and also that explained to us why the Russell 2000 managed to inch out a gain of 0.2% yesterday. All right, now over to the FX market over here. So over to the FX market, what we could see is a rather choppy fashion. Yesterday, the dollar managed to roll slightly higher ahead of this key risk event, which are going to take shape later at 10 p.m. today Singapore time, which is Fed Chair Powell's speech at the Jackson Hole Symposium. Why this speech is important? Because Powell may start to signal, will there be a potential change in monetary policy, or will he continues to maintain his rather stubborn wait and see approach? And the reason given due to sticky inflation, right? So market is awaiting that. So there's a slight uptick of the dollar strength yesterday. Then after that slight uptick, the dollar just tried to trade sideways in today's Asia session. So if you look at the 1 day rolling performance, that's about 24 hours ago, the dollar against the yen, the dollar against the CAD, the dollar against the Swiss, the dollar against the Aussie, all try to trade in a sideways fashion. And there was actually a bit of dollar weakness against the Aussie dollar, as the Aussie dollar rate has now come close to a key support level, which I highlighted yesterday. I'm going to share with you guys again in the second segment. All right, and also in today's Asia session, there was this release of key Japanese economic data, which is the Japan inflation rate, which is very important metrics for BOJ to decide their or to set their monetary policy. And we know that based on the short-term interest rate market in Japan, and as well as the current stance of the BOJ officials, there is still a potential one more interest rate hike that may come from Bank of Japan in 2025. That means that's coming to the Q4 of this year. So that also being centered on the core inflation rate trend. So the core inflation rate trend over here came in above expectation. All right, so core inflation rate is at 3.1%. It dipped slightly to from 3.3% that was printed in the previous month of June, but it came in above expectation. And the more important metrics will be the core inflation rate, where it strip off the fresh food and energy. So for Japan, it's a bit unique. So Japan termed their core inflation, the core inflation rate, as excluding fresh food and energy, and the core inflation rate is only, I think, excluding energy. That's all. So The core inflation rate actually came in at the same pace at 3.4%. And if you look at the trend of the core CPI rate in Japan, it still remains rather steadily rising, way above that 2% target that Bank of Japan desired. So right now, it seems to us that inflation trend in Japan has started to slowly rise or stabilize above that desired 2% target set by Bank of Japan. So that actually give kind of a importance or a supporting factor for another potential rate hike to come into Japan before 2025 ends. All right. So, but however, that haven't materialized into the dollar yen rate yet. Okay, but the dollar yen didn't show any signs of weakness at the moment, because we know that FX market is rather relative. So for the FX traders right now, the near-term risk over here will be what is Powell is expecting to mention in his Jackson Hole symposium speech there later. All right, so that sum up the first segment of the daily dose for today. Let's now move on to the second segment very quickly, which is the intraday technical outlook. All right, so let me expand my screen. Okay, so let's start with the FX market first over here. So over the FX market, let's start with the euro dollar. So euro dollar, we do have a bearish bias yesterday, and the bearish bias now is coming very close to our support level at 116 figure, 115.90 over here. And also what's interesting over here is that the price action dipped lower. We see a series of lower low, but very interestingly, the RSI has started to shape a bullish divergence, okay, indicating that yesterday's push down, the downside momentum has started to ease off. And what we could see over here is that the corrective decline that has taken shape since last Wednesday high, which is 13th of August, is now coming very close to a key Fibo retracement level that retraced the previous short-term push-up from 1st of August low to 13th of August high. That is 50% Fibo retracement. And this 50% Fibo retracement also coincide with this rather significant near-term clustering area where there was some form of a price action consolidation before the rally take shape previously from 6th of August all the way hitting a 13th of August minor swing high at 117.30. So this 115.60 level give it a very important inflection zone, and coupled with that bullish divergence that's being seen on the hourly RSI, this area over here could be potentially a springboard for at least a minor recovery to take shape, given that key risk event horizon is coming soon today, which is the Fed chair speech at the Jackson Hole symposium at 10 p.m. Singapore time later tonight. So I'll be using since that there is this positive element emerging, in terms of reward risk, I may not want to be so bearish right now, given that it's fast approaching this key support level where it could be an inflection zone for it to actually springboard into a recovery scenario or a potential minor bullish reversal scenario. So I'll be flipping to a bullish bias today using 115.60 as my short-term pivotal support level. Near-term resistance level to watch will be 116.45, which is a very important level because that confluence with two technical elements. One is the 50-day moving average that is acting as an intermediate resistance, and also coinciding with this descending trend line resistance, a minor one that is in place since the minor swing high of 18th of August, which is coinciding at the same level at 116.45. So take this as an upside trigger level. All right, a breakout above 116.45 will increase the probability of that bullish bias to revisit the next near-term resistance level at 116.90 next for today. However, a price action breakdown below 115.60 with an hourly close below it, that would invalidate the bullish recovery scenario bias to see the extension of this minor corrective decline unfolding further towards the downside towards 115.20. A break below 115.20 exposes 114.60 next. So that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar is also trading almost in the same fate as well as the euro dollar, inching downwards. And what's interesting is that it already come close to our support level that we have our bearish bias yesterday, 134 figure, 133, 133.70. All right, 133.70. So 34 figure, 33.70, almost hit, and also resting exactly at the 20-day moving average. And what's interesting over here is that price action is also coming down very close to this 50% Fibo retracement of that previous short-term push up from 1st of August low all the way up to the minor swing high of 14th of August. So that's a 50%. And the 50% Fibo retracement also coincide with this key graphical short-term support level. Previously was resisted on the 30th of July, hit a low, then thereafter did that bullish breakout on the 7th of August, indicating some form of important sentiment behavior that took shape during that point in time. And that being said, potentially this 133.15 level, which is the 60% Fibo retracement, slightly lower, and this 60% Fibo retracement also coincide with this graphical important congestion area previously, where there was a fierce test by the bears that prevent it to have a breakout shape lower low, tested one time, can't break out, pull back, tested the third time, pull back before shaping that strong minor impulsive up move thereafter from 6th of August. All right, so this 133.15, 134, 33.70, this region over here will be a potential important inflection zone to potentially springboard for a chance of the sterling dollar to shape a potential recovery scenario or a minor bullish reversal scenario. So given that, I would not be so convinced right now for the sterling dollar to maintain a bearish bias. So instead, I will flip to a bullish bias right now for the sterling dollar using 133.15 as my short-term pivotal support level. Intermediate resistance level to watch will be 134.60, which is this ongoing minor descending trend line that is still in place since the minor high of 18th of August. A breakout above 134.60, take this as an upside trigger level, will increase the probability of this potential minor bullish reversal to visit 135.10 next for today. However, a bearish breakdown below 133.15 will see the extension of this corrective decline sequence to unfold much further to the downside, exposing the next near-term support zone at 132.45, 132.20 next. Very quickly, next up will be the Aussie dollar over here. So the Aussie dollar continues to trade yesterday sideways at our first support level at 64.20. And what's interesting over here is that the RSI continues to shape a series of higher low. All right, and right now it's attempting to actually break out above the 50 level mark over here, indicating some signs of bullish momentum has started to creep back into the Aussie dollar, at least in the short term. So still no change, still looking at the 64 figure, 63.90, which is the 200-day moving average, a key moving average that confluence with this expanding wedge range support that is still in play since 23rd of April 2025 low. So we'll maintain that intraday bullish bias for a potential short-term minor recovery scenario to take shape. First resistance level to watch will be 64.55, 64.60. Above it may see a squeeze up towards 64.80, which is a very key sentiment area as well, where previously it was tested, managed to shape a strong intraday bounce, tested. But however, this bounce was not so strong during 18th of August. Then thereafter, it broke down and shaped that 2 days plus of down move before stalling at 64.20. So therefore, this 64.80 is a very important sentiment level, and it's also now confluence very closely to the downward 20-day moving average. All right, so that's for the Aussie dollar. However, if we start to see a breakdown below 63.90, today's bullish bias view for that recovery scenario will be invalidated to see a further slide to retest 63.70 in the first step, which is the minor swing low of 23rd of June. So that's for the Aussie dollar. Quickly will be the dollar yen. So the dollar yen yesterday did a squeeze up over here before the release of this morning Japan inflation data. Is squeezed up above the 20-day MA, which is our pivotal resistance level as well. That invalidate that potential that push down that we want to actually retest 146.70, 146.40, which is the 50-day moving average, And once you're trading at this squeeze up now has really hit the next resistance level at 14875, and the hourly RSI is back at the overbought region again. So with that, I will have a neutrality stance for today on the dollar yen. So neutral between 14875 and 14785. So only a bearish breakdown below 14785 may reinsert that bearish bias within this sideways range configuration to potentially revisit the 50-day moving average at 14670/14640 next. All right, that's for the dollar yen. Next up will be the major stock indices, starting with the Hong Kong 33, with that representing the Hang Seng index over here. So the Hong Kong 33 managed to recover. So the cash Hang Seng index now is trading up by 0.3%. But however, from a technical perspective, it continues to be trapped in this kind of minor sideways rangy configuration since the low of this Wednesday at swing low of this Wednesday at 24,915. And yesterday we flipped to a neutrality stance. So in early today's Asia session, price action also try to break the upper limit of this neutrality zone but can't break through and form a hourly shooting star candlestick pattern. So there's still a lack of conviction based on the price action as it tested the 25,270. So for now, I'll still maintain that neutrality stance for the Hong Kong 33 that's representing the Hang Seng index over here. 25,270 upper limit, lower limit will be 24,915. Only a breakout above 25,270 will flip the buyers back to the bulls for at least a short-term bounce to revisit 25,545, 25,545 in the first step. And also one of the news flow reason that is supporting this current upbeat tone on the Hang Seng index that is up by 0.375% was this news flow stating that US company, this major airline company that does airline parts, Boeing now is in talks to sell its product as many as 500 planes back to China. So potentially that could be a prelude to better trade relationship between US and China, as right now their trade truce has been extended to another 90 days to stretching it to November. All right, so something to look out for. Now back to the technical outlook. Next up will be the Japan 225 representing the Nikkei 225. So the Japan 225 managed to test our pivotal support that we have yesterday over here at 42,513, 42,460 level. All right, so still no change. I'm still looking this as my pivotal support because this support didn't break. And what we could see over here is that upon the test at the start of the Japanese session today, which is 8 a.m. Singapore time, it managed to form a bullish hammer candlestick formation. All right, still indicating some signs of bullish biasness that is still intact on the Japan 225 over here. So still no change, still using that 42,513, 42,460 as my short-term pivotal support zone for the Japan 225 for a potential recovery to step in, but the upside trigger level still remains the same, which is 43,060. So it got to break above this 43,060 to increase the probability of this minor bullish reversal scenario to take hold for the next intermediate resistance to come in first step at 43,470 next. However, if we start to see a bearish breakdown below 42,460, today's bullish bias view will be invalidated to see the extension of this corrective decline sequence, revisiting the rising 20-day moving average, which is confluencing at this next near-term graphical support zone at 42,000 level, 41,760. And in terms of the Fibo retracement taken from the current short-term up move from 1st of August high low to 18th of August high, that is the 50% Fibo retracement. Right, so that's for the Japan 225. Okay, next up will be the Germany 30 representing the German DAX. So the Germany 30 and the German DAX also in a holding pattern over here. So, but this holding pattern still managed to hold above that pivotal support level that we highlighted yesterday, 24,155. So since it didn't have it's still going to hold that level. So this is indeed a pivotal support that I got to pay attention to for today as well. Again, so no change in terms of the key levels. 24,155 short-term pivotal support level, maintain that potential bullish bias, but that bullish bias scenario the probability will potentially increase if we have the bullish breakout that the boost needed to go above that 24,440 that has been resisted since the start of this week, which is this Monday. So take this as an important level, or this week intraday high. So this week intraday high, if it's managed to surpass at 24,440, potentially it could open up scope to see another round of bullish impulsive up move coming into the Germany 30, at least in the first step, revisiting 24,560 followed by 24,730 next. However, if we start to see a price breakdown below 24,155, today's bullish recovery scenario will be invalidated to see the continuation of the slide to revisit the 50-day moving average that is confluencing with the next graphical near-term support level at 23,990 next. So that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30, the Dow Jones Industrial Average. So yesterday, yes, despite Walmart disastrous so-called price action behavior, exposed earnings result release, the US Wall Street 30 managed to survive at the pivotal support after the challenge of it and managed to bounce off at 44,715. So this is my pivotal support that we have since the start of this week. So indeed, this level here still continues to remains the same key support level for the bulls, where there is some bullish biasness that keep this support level alive. So I got to still respect this level. This is still indeed a pivotal support. So being that it managed to bounce off this support, it doesn't pace me to flip to a bearish bias over here. All right. So 44,715 still being a pivotal support level that's important to the US Wall Street 30. So for now, based on the latest price action, what we could see since the intraday high of 19th of August, it starts to form a minor descending trendline resistance. So my first resistance level to watch out for today, take it as an upside trigger level, will be at this 44,900 level that coincide with this minor descending trend line, and as well as very close to yesterday's US session high as well at the start of the US session, which is 44,900. Let me put it in writing. All right, 44,900. First resistance level, a breakout above 44,900 will become like an upside trigger level to at least revisit the former all-time high area at 45,100 based on the price action of the US Wall Street 30 CFD index, which is representing the Dow Jones Industrial Average over here. Only a breakout above 45,100 potentially will see the higher chance of a higher high that's got to take shape to a fresh all-time high at 45,455, 45,520, which is defined by a Fibo extension cluster level. Only a price action breakdown and an hourly close below 44,715 will invalidate today's bullish bias to see the extension of this minor corrective decline unfolding further to the downside, exposing the next near-term support zone at 44,470, 44,420 next. Next up will be the S&P 500 over here. All right, so the S&P 500 also continues to hold at our pivotal support that we mentioned yesterday, and also this lower boundary of this minor medium-term ascending channel support that is still in place since the low of 23rd of May. Right, so no change. This is still indeed a pivotal support level to watch. 6,370, 6,350 still maintain that potential bullish bias on that SPX 500. Near-term resistance level right now, something like an upside trigger level, will be yesterday's Asia session high at 6,410. Right, so a breakout above 6,410 will increase the probability of this potential minor bullish reversal scenario that may take shape to expose the next near-term resistance level at 6,440 next, at least on the intraday basis. However, a price action breakdown below 6,350 will negate this bullish bias or invalidate this bullish bias to kickstart the extension of this corrective decline scenario sequence, exposing the next support level at 6,294, which is the minor swing low of 5th of August and 6th of August. Lastly will be the Nasdaq 100. So the Nasdaq 100 also continue to hold at our pivotal support level, which is 22,960, 22,945, and also coincide with that rising 50-day moving average, and also the former upper boundary of that long-term circular ascending channel from March 2020 low. So still no change for that, except that today I will have a lower resistance level to watch. So still maintain that potential minor bullish reversal scenario. First resistance level to watch will be yesterday's Asia session high at 23,308. Above 23,308 may seek out next near-term resistance level to watch, which is the 20-day moving average, I think as the next intermediate resistance as well, confluencing at 23,420 for today. However, a price action breakdown below 22,945 will invalidate today's bullish bias and also put that medium-term uptrend in jeopardy to seek out the next intermediate support level at 22,680 next in first step, which is the minor swing low of 1st of August. All right. So that sum up the intraday technical outlook on the 6 major stock indices. Let us now move on to the commodities market. So commodities market, let's start with gold. So gold continues to trade in a sideways range configuration over here. So without doubt, it's still holding below the 20 and the 50-day moving average, and also still below our pivotal resistance zone that we highlighted yesterday, 3,347, 3,352. Yesterday, it tested our first support level at 3,327 before shaping a bounce back up to test the 20-day moving average and got rejected again. All right, so still no change, still maintain that bearish bias within this sideways complex range configuration for gold XAU/USD. Next support level to watch below 3,327 will be 3,310, which is the minor swing low of 20th of August, and also the former minor swing high of 31st of July now turns into a pullback support area. Only a bullish breakout above 3,352 that would invalidate today's bearish bias to see a squeeze up towards the upper limit of the range. In first step, coming in at 3,359, followed by 3,373 for today. So that's for gold XAU/USD. Now, West Texas crude oil over here. So West Texas crude oil, yesterday it managed to see a gain of 1%, but however, today's Asia session, it got it stopped. Okay, not during Asia session, during the US session, it just traded in a very tight sideways range at our upper limit of that pivotal resistance zone that we highlighted, 63.85, 64.18. So the reason why yesterday push up over here was that there was this Trump remark stating that he asked Ukraine to play offense as he pressured Putin. So what this remark suggested that that so-called earlier optimism of that peace deal between Russia and Ukraine seems to have some minor roadblock at this juncture. So based on yesterday's Trump's remark of asking Ukraine to play offense, so that actually causes oil prices to spike up by 1%. But interestingly, it's still paused at that short-term pivotal resistance zone that we have. So given that it can't have a proper breakthrough above 64.18, and interestingly, the hourly RSI has started to shape a bearish divergence, a lower high, are we still having that bearish bias on the West Texas crude oil, given that it can't break above the 64.18 level, pivotal resistance level, and with that bearish divergence on the hourly RSI as well. However, I will have a near-term support level to watch for today, which is yesterday's minor swing low at 63.30. All right. So first support level to watch 63.30. A breakdown below 63.30 will expose this rather key minor range support of 62.50, where oil prices managed to survive this Monday. So a breakdown below 62.50 will increase the odds of this ongoing impulsive downward sequence for West Texas oil to expose the next near-term support level at 61.30, which is the 2nd of June 2025 gap up. Only a bullish breakout above 64.18 will see a squeeze up towards 64.85, followed by 65.60, which is the downward sloping 20-day moving average, coinciding at a similar resistance level as well. All right, so that sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for other than Powell's speech during the Jackson Hole Symposium at 10 p.m. Singapore time today? So in fact, there is not much key data to look at during the European session as well. For those who are looking at dollar CAD, which is the Canada dollar, 8:30 p.m. we have retail sales from Canada that could potentially influence the movement of dollar CAD and the CAD crosses. And at 10 p.m. will be that all-important key risk event today, which is Fed Chair speech at the Jackson Hole Symposium, which I explained to you guys earlier. And with that, that potentially has the key, that will be the key data to look out for today. So with that, that sum up today's Daily Dose of Market Insights. I'm Kelvin here, signing off. I wish you all a great day ahead, and as well as a wonderful weekend thereafter. And we shall speak again on next Monday. Thank you.